Alright, so we are going to explain this trade over here. So this is GBP I caught this trade actually in the morning. I think it was mid-afternoon, right? So I caught this trade. It was a sale on GBP and the account was at $18. Then it's now currently at $33. But let me just show you the setup and what I saw in this setup. So first of all, I went to the M1 so that I could see the setup. It clearly see the setup, right? So in the M1, I drew these trend lines. These are the first trend lines. This is where actually I caught that trade, right? If you observe, we have like a kind of a falling wedge, which usually buys, right? So this kind of pattern usually buys. But considering that the market was in a selling, let me just show you. So you see that this pattern, it usually does what? It usually buys, right? It usually buys. So that's why I sold there, because our pattern became invalidated. So that's why I took my entries for sales. I took my sell entries over there, right? And then I just held. So what I was showing you was that the first tip was reached, and therefore I was just holding to see that. If you observe from here up to here, first tip was reached, so that means the rest of the movement is just consolidation, then continuation downside. But yeah, with this setup, you can even have entered here for a buy at this area where price we tested. You could have entered for another buy up to the top there. So this was all opportunities. Then over here we have some bit of like a falling wedge type of situation. Okay, we have a kind of a falling wedge type of situation here. Can do something like this. So this one, you can see it more clearly in the M5. Actually, the M1 is better. Okay, so for this one it will buy. Of course, it will buy. It first sells off just to clear liquidity, and then it buys, right? So if I were you, I would close these positions. Okay, so yeah, that's the setup that I got. Let me first close. I want to close this big boy. If the big boy is closed, the rest can follow later on, right? Okay, so the big boy has been closed. So far from $18, now we're in $33. Now we're going to risk a little bit less because price is now starting to build up, starting to pick up the momentum. Also, guys, I want you to observe that at this area of resistance, this area of support, sorry, if you observe, this was an area of support. Price came here, it bought the first time, okay, and then the second time it came, it bought again from that area until we had this minor break of support. So this was like a fake out, right? This is what they call a fake out. Price comes underneath a level of support and then it continues going inside. So the best way I usually trade this, I usually just love to look for a pattern inside the M1 so that way I can take my entries. Here you can see that we have a bit of a W. This is like a W, right? It's not like, but it's really a W if you observe. We have this left, right? We have this left, then this have this is the right, right? So you have a left and a right, form of like a double top. But the crucial fact here is that price is gonna buy from here. So if I was to take my buy entry here, if I took my buy here, close, I put many positions because I wanted to increase the maximum load that I will gain from this trade. But what I'm trying to mean is that, as you can see, we already have like a W formation over here. That means that price will respect it by going even higher. So the first TP is for the W is this double bottom. If you observe, we have a bit of like a double bottom over there. Have the first time price came here, it bought. The second time, now it's starting to buy again, right? But also you have to observe that this W comes all the way from the top there. So the repetition is that price will likely have the second push to the first area there above. Yourself. So once we have that double bottom, and once we have confirmed that price is likely to have another push down or push up, sorry, then that is all that I need to take my entry for buys, and then the tip is always gonna be there up. And yeah, all I just have right now is just hold. This has like a 50% chance of working out. So you know, a 50% chance simply means that if you're wrong, all our money is gone. Our money is gone, right? So I'll close the sale. I think it's not closing yet. But anyways, what I want to say, I close the sale, and then I just hold this setup, because this setup, if you were to hold up to there, that would be around $0.87. So if you hold up to here, that's around let me just take $1. So I have like 1 2 3 4 5 6 7 8 9 10. I have 10 positions, right? So 10 positions times 1.4, it's like $14. So I'll be currently just making $14. But if it fails, if the setup is invalidated, I want to go to like how can I close like my position here? Okay. Not giving me a chance. What I'm saying is that I would like to just close out if price makes any funny movement. As simple as that. I wanted to give you another example of this same setup, right? So the thing with the UPAD, bottoms up analysis can actually work wonders for you, especially if you are vigilant, right? It can work wonders for you. So let me just take this example. Of course, now we have insight here, so there's lots of buyers here, right? There's lots of buyers here. We have the insight buyers over here, so we shall be very careful. Because price already made this movement, so there's no such thing as, oh, this is a perfect holy grail trade. No. Okay, so this setup, as you know, it usually does what? It usually buys. No, it usually sells off, right? So this is like a rising wedge. Rising wedges do fall off, right? So we have this area of what? We have this area of resistance. This is the M1, guys. This is the M1. I'm not even going to the high time frame. This is the low time from the M1. So on this time frame, we see that price came here, and then after it came here, we had the liquidity grab. If you observe from this area, price came here, made a liquidity grab, and then afterwards it started to push up higher. So how would you have anticipated, like how would you have increased your probabilities? You would have gone simply to the H1, and then you would have looked for that area. Okay, so if you observe, this is where we are on the H1. So from the H1 perspective, you would have observed that price is having some bit of actually, do not, if you can just follow the highs and lows. If you observe, this is the previous market high. So after price comes here to clear liquidity, if you observe, this is a low, right? So price just stops this low to clear liquidity, and then after some time it buys off, right? So this would have been an entry model. The liquidity was swept out of this low, then afterwards price came and then pushed up, right? So the same model happens over and over again. It's up to you to like repeat the same process over and over again. So it's the same thing is happening over here again. So see that we have this high over here. Price came and swept the liquidity from that area. Now it's starting to push what? I need to close this, please. No, I want to close this sell. I want to close that sell position so badly, but I'm just caught up. Anyways, as I was saying, price took out the liquidity there, and then decided to do what? To sell. But now the issue that we are having with this market is that it already made a fake out, right? We have already a fake out at the bottom. once we have a fake out at the bottom where liquidity was swept out, we may have a higher probability that price will likely have another second push to the top. That is all that I'm trading here. The first time I told you guys that price comes here to take out the liquidity, then I'll be looking for buy entries. So a very good setup would have been if price had just taken out the liquidity, and then you would have started to stack in your buys from that area. Yeah, and I think that's my model. Now the question that remains is, does this happen all the time? Well, in most of the cases, yes. Sometimes price just loves to take out liquidity before it pushes lower or higher, right? And you can see this model happen over and over again, like most of the cases, right? Over here I'll go again to the M5 can also work, but you know, don't want to complicate my stuff. Close. Alright, so I'll let these small positions ride, but so I wanted to explain something here from the M1 perspective again. We're just suffering because of spread, right? Just suffering because of spread, but we shouldn't be scared of anything. I'll just give you just, because this is all hindsight, that's why I don't really love going all that deep, because this is hindsight. Like, I already knew what happened here, so I may not be like of relevancy, sorry, when I'm trying to explain this. So this is the same setup. This is like a falling wedge, right? And this falling wedge, usually you just measure the first TP, but remember this is GBAUD, so the spread is going to take you out most of the cases, so you must be very vigilant on that. So if you take a trade, observe the spread and understand that price will usually go in your direction, but it will first take you out, especially if you entered on a very small account and you entered like without considering the margin. You just be taken out, then price will continue in your direction. But anyways, in this case, price sold off. The first TP was reached. The reason why I love trading these setups is that they really work most of the time, right? Most of the time these setups are gonna make you cash. Like 60% of the time you're going to be right, and when you're right you're going to make way more money. So it's up to you to just control your losses, minimize those losses that you have, and everything else will be fine. So you have the falling wedge again over here. So this is like price was making a falling wedge kind of situation. So if you observe over here, price came over here, and then afterwards we had that massive momentum push to the upside. So even here you would have just bought off of like the breakout, right? You would have bought out of the breakout, but I've said this is all hindsight, so there is no such thing like this would have been the perfect setup. No, I'm just saying that this could have happened if you had followed the same setup over and over again. And what most people miss is that repetition is not necessarily, there's not necessarily a good consistency. It's adaptation. It adapts to the market conditions. So over here we have something like we had two false breakouts. This is the first false breakout, and then afterwards price came here and made another false breakout over there. So these are the two conditions that you have to have seen in the market at this area, otherwise it would have been taken out. So price came here, made a fake out, and then it continued to the downside. Okay, even here I had a fake out, and then after the price continued to the downside, and then after it came to make another fake out, then continue to the downside. So this setup is a kind of a rally based drop. Okay, and the way most people trade this is that most people just draw like a trend line or like a rectangle from around there, and then they drag it. So let's go to like the H1. They drag this triangle, I think it is here. They want to see price pull back to this area over there, and that can take lots of time, bro. That can take lots of time, so it's really up to you. Okay, so far you see that we're already in profit. I told you that you're going to start buying. It's not like I knew this hindsight. No, I'm just telling you that after liquidity was taken out, because price came here, took out this low, and then after we are expecting that it may have another continuation push to the upside. So if I'm to take a profit, I could take like at around, $2 per position times 10, that's $20. So from our 18 we'll be in $50. Let's wait out this trade and see how it happens, like in real time. And I'll be explaining more of these videos in the next coming videos. You see, you guys, you have to understand that life is not just about trading. There are so many aspects of life, and I want you to just be on your charts, get the trade, take the setup, get out of the charts, go do something else with your life. Don't be so caught up in this mentality that I have to trade every single day and make money. No, take your trade, take your time, slow down, right? Breathe. Don't just breathe, right? Just breathe. Accept that the risk is always there. Accept that it's not always a holy grail. There's so many aspects that you miss. There's so much hidden knowledge. Even the people who do fundamental analysis, that's why for me I don't usually do like the fundamentals. I don't really love to go into like, oh, is this what's happening in GBP AUD? No. That's my macro scale. By macro scale I mean that trend, if we say that GBP AUD is stronger in the 1 year, it's bullish in the 1 year time frame. It's a 1 year time frame. Like, it can have a pullback and it will take you out before it makes that continuation push. So like I wouldn't even like stress over that. But anyways, I'll see you guys in the next video. Currently we are pushing down, up and down, up and down, up and down. But yeah, we shall wait it out and see how it plays out. Thank you.